Negative CPI month over month with a positive forecast. It never happened since last 10 years. We had cases when we came with a negative CPI print like in May 2020, but it was predicted that it's going to come negative after the strong spike of inflation. This time, completely unprecedented. Forecast 0.1, the actual minus 0.1. We didn't have it since forever. And there is nothing right now that's going to prevent Fed from starting to pivot. Now, amazing numbers yesterday. Of course, PC print is going to come in a few hours, but that's a bit of a lagging data. So what I am really liking here, that we are starting to invalidate the stagflation scenario and we are really favoring the Goldilocks. And if we're going to look now on this CPI print historical data, as I said to you a minute ago, we never been yet in the situation where we would forecast the positive and receive the negative. So that for sure gives fears to the Federal Reserve that we start to deflate, and they don't want deflation to take place. They have a mandate to keep 2%. Sometimes they say 3% is also okay inflation. So what that means for Jerome Powell, it means that they will start speaking about the cuts sooner than later, and it can be as soon as in the month of July and August. Yet, I foresee for sure one cut until September, for sure two cuts until the year end, and the macro traders are pricing right now the probability of 3 cuts as 25%. On the other hand, look at those ugly closures, divergence over divergence, and here we are on the Nasdaq daily. And does this engulfing candle look good to you? Well, for me, definitely not. So we need to understand that there are plenty of headwinds ahead of us when we are speaking of the short term, simply because we are at RSI levels not seen for a while before. And it's normal that with that level of exuberance, the profit taking starts to take place. But if we're gonna come right now to my model and we're gonna see where we are, I am still very much bulled up, because here on the medium term drivers, you can see I highlighted them in green. We have the Goldilocks instead of stagflation scenario pricing in. We still have very good jobs, and I think this is one of the most crucial things ever to look at. And if you remember one last month, every time I've been telling you I'm looking on the jobless claims, I'm looking at the non-farm payrolls as if no tomorrow. That's the most important thing to observe, because that actually gonna give the hint, and Federal Reserve is looking at exact same numbers, if they gonna cut sooner or later. And if the jobless data would start to spike, obviously there is nothing that would let us speak about a Goldilocks scenario. That would give to the market the hint that Fed is way behind. They already missed the point to pivot, and everyone would start profit taking. And luckily we are not yet there, and maybe we will not be there. So that's why it's so important to observe. Now, we have also Fed versus economy. I give it a positive one, because definitely based on everything that Jerome Powell has said, it looks like we are gonna be supported by dovish decisions. And one thing that I really like, and I saw in a press conference yesterday, those words from the press itself, where she says we are at the point where additional labor market slowing is more likely to result in a raise in unemployment. So Fed starting to prepare the ground for themselves to cut. They're starting to say, if we keep higher for longer, that would cost the jobs to American citizens, and we as Federal Reserve have the mandate to prevent it at any cost. You see how the slight shift in tone already gives you the direction of what they're gonna do, and that's very important to see what are the keywords, what are the bullet points of those press conferences. Now, coming back to my model, it's clear that midterm we are bullishly aligned, and of course, as I said, short term there is a little bit of a problem, there are a bit of a headwinds. I don't like this monthly direction. It's very probable that Nasdaq would start to lag from here, or probably we're gonna have a couple more spikes for the technical traders. I'm gonna show you one little trick here. have a look on the trading view. Very often when we have those flat candles, it means a lot of poor highs. So we can also, spike 1 or 2 times up, just simply liquidating all the early shorts on the way back. And that can happen, but in my opinion, right now the place to be is Russell 2000. It's definitely not Nasdaq, it's the smaller caps. For those who have been sharing my thesis, you see yesterday we are actually gapped up almost 5% in a day. But what's the most interesting about this index is what I'm gonna go on the weekly or on the monthly, we would see that Russell 2000 is far away from its all-time highs. So now it looks like we are forming this cup and handle or Adam and Eve pattern, very bullish. And here we are still 17% almost from our all-time high value, just to do what Nasdaq and S&P 500 have already done months ago. So small caps are way more sensitive when it comes to the cost of capital, when it comes to interest rate. Why? Because very often they are not net income positive. So it takes them an extra effort to maintain their positions, to even assure their survival. They're heavily borrowing in order to run their operations. So when the interest rates going down, all the discounted cash flow models, all the DCF models are heavily repricing the evaluations of those companies. And this is why the valuations and stock prices are heavily affected, gonna be affected with those upcoming rate cuts. So this is a signal for you that you might start consider being a little bit risk on than risk off. And in today's video, I'd like to give you a few bets on where those risk on attitude can pay off. So stay tuned. My name is Russ, and today on Friday's Data Dash video, I'm gonna give you my favorite place. And of course, I already shared both theses with the newsletter subscribers in my Telegram alert group. I'm doing it completely for free, by the way, guys. So if you want, it's less than $1 a day. Go subscribe to the newsletter. I can't do it for everyone because I actually read every single message of all of you, and you're more than 1,000 by now, so I can't read several thousands of messages, but I can read a few hundred. So in any case, I'm trying to provide my thesis intraday. Like yesterday, for example, I've been all day trading. So I shared my short on Apple. I went short, open 6-digit position at around 228. So slightly in profit right now. That's my hedge. We went long on Nike. We done a lot of things when it comes to silver miners, of course, because those cuts are very bullish. But what I wanted to share with you right now, my bullish fundamental rating on TLT. So I went yesterday long on TLT, and of course, with inflation coming down, I think TLT would benefit, but still speaking technically, it needs to break above 95 short term, and then all the way we have an upside to 120. Let's look at the chart. For those watching my past videos, you remember that we already analyzed the chart and we looked at it. I am quite happy with my work here in the channel. I think in the last 3 months or so since I joined, I've been very accurate. We spot every macro trend. We spotted a lot of great plays. Made millions of dollars for the community. So I'm quite happy with my work. And at the same time, it's just to say that we've been waiting for that. There is nothing that comes as a surprise. I already saw that move in TLT coming even prior to Fed announcement, because of course, in this world of 5D chess, you can't predict everything, but once you start understand the macro moves and the global capital allocations, you have a good sense of what's gonna come, and you have all of those moves and indexes interconnected in your head. So here with the TLT, what I'm waiting for, I am waiting for the level of 95, as I wrote in my Telegram alert group. Let's pin this here. 95 gonna bring us around this level. And once this level is reclaimed, I am really looking forward to something like that. That will be an amazing move. Why this move is going to be so amazing? Because not it's just going to provide you 28% when it comes to the TLT prices, it's gonna also give you roughly 4% on top per year as the guaranteed by the US Treasury dividend pay. So we're gonna end up having moves from both directions, from the assured yield and from repricing, because if interest rates are going down, obviously the bond prices are going up. They're reversely correlated, and this is the move I don't want to miss. I have a large 6-digit position on TLT, and I can always scale in more via put options assignment, or I can actually hold it over the year or two and sell covered calls on that, being paid the premium for actually owning TLT. So I would collect another 3-4% on top. Imagine how that can be played well if you are smart and you understand what you do. Sometimes people are coming to me and saying, no, bonds are for old people. I don't do bonds. I'm like, yeah, I understand. You don't care so much of 3% per year. But here, when we are trading the bonds, it's a completely different story. So please be open-minded to that. So we had our play number 1, Russell 2000 IWM or RTY if you're trading futures. Now we had our play number 2, TLT. And we're going to have now our play number 3. And for the play number 3, obviously for those who follow me for a bit, you know how bullish I am on Alibaba in particularly and overall on depressed Chinese market. People are calling me crazy for buying Alibaba at around $70 to $74. I think that is an amazing play, and the reason for that I also outlined in my Telegram group. I said, guys, if Nvidia can jump to $3 trillion company market cap in a country of 300 plus million people, how far that Baba can only be 5% of the market cap of Nvidia. You have to understand, it's the same thing that happened with Apple. It's a bit of a narrative thing in there too. You remember when we longed Apple at 160 and where we are right now. Now we are shorting Apple at around 240. I am playing the market both directions, and I am not afraid of doing that. But what happened about Apple? They were the last one to announce their AI moves among Magnificent 7. And as soon as they start bringing the sparkles of this idea that they're acquiring, actually they spent $80 billion on acquiring AI companies, you remember how market react? You don't remember? Let's have a look how market reacted. This is the Apple chart, and if you follow me for a while, you remember that in the low of this range, we were accumulating Apple. Not just that we did 17% to the range high, we kept pushing and did 37% in a matter of a month and a half. If you can do that on a multi-trillion-dollar company with all the associated risk, which is so much smaller than, for example, going long on psychedelics or cannabis stocks, or also, for example, on a junior silver miners, I'm very bullish on them, but I also assume that there are certain downsides that can happen with the company of $50 million market cap that are not going to happen with Apple. And Warren Buffett was selling. Warren Buffett said a company which is spending the money on shares buyback is none of his interest. And I agree with him. He's a very wise man. But I'm also understanding technicals, I would say, a little bit better than Buffett. So I'm also a technical trader, and I understand how things are functioning from the liquidity perspective, right? Warren Buffett doesn't need to look at the chart. He looks at a balance sheet. I'd like to look at both. Of course, I'm not as sophisticated as Warren Buffett when it comes to the balance sheet, but I can trade the charts in a matter of a month, having the gains that the large players cannot afford. I also understand, Warren Buffett said it multiple times, if he had 1 million to play, he would also do 50% a year allocating them properly, right? I aim at having slightly more than 50% a year. I would say 60, 65 is what I would be happy every year if it's sustainable. But I also don't have the base of Warren Buffett. Neither have a base of 1 million, right? So it's something a little bit in betweenish. And that's the reason why, of course, the base matters. You cannot play with 1 trillion the same way that you play with 10 millions, right? And simply with 1 trillion, you would exhaust the entire option chain. There's nothing that you can do in the option world, for example, and so on and so forth. But coming back to the charts, I think 17th of June, I gave it the signal to add Baba. Where was Baba on the 17th of June? It was here. It was here, right? We were in this pocket zone at around 73. And we put a stop loss at 70, was not hit. And here we are. And I believe this is just the start. Why so? Because I indicated my first TP will be 115, not less than that. And taking into account that Baba start issuing the dividend payments today, and there will be more and more investors attracted to those, I believe that this is a great hold from here. Let's have a quick look at where 115 gonna bring us. If you enter together with me, that we are speaking roughly about, I need to zoom out additionally, it's 115. We're speaking about 55%, guys. If you're gonna enter as of today, then we are speaking around, we are speaking still around 47%. Not bad, huh? Not bad for the company of that size, of that scale. And if you're just gonna look at the chart, you'll start seeing how we've broke the market structure here. We came to retest. We came to retest that pocket of liquidity, all the gaps in here. We grabbed, and now we are about to swipe those highs, those highs, those highs. Hopefully, I'm also talking about 120. And Baba, of course, is not the only play that I'm interested in. I went quite heavy on China in the last month, but everyone was absolutely scared and selling. This is also something that you need to understand. The market is extremely emotional. And that's the reason why, for example, I stopped doing real estate, because the fluctuation of the price there would be like 10% a year. It's not interesting to me. If I master my emotions well, if I understand how the herd mentality functions, how the market psychology functions, I can master 30, 40, 50% moves in a year. I am not creating the security, safety around myself to just like play 5% up and down. Why? Because I'm profitable, right? So as soon as you become profitable, you also understand that works towards your advantage. So don't go all in yet crazy, but stick, hang out, share with your friends, learn together, be here for the next 2 years. And I am very sure that's going to be a lot of self-made millionaires that will come out of this channel. That's the reason for me to be here. Actually, I am following the bigger purpose. I am not so much caring for making a little bit of an extra money. I think I'm good, and just wanted to share with me particularly the story here is I am not happy where the governments are bringing us. I'm not happy about this wealth gap that has been the highest in the history. I'm not happy about modern monetary theory and policy and how the governments are printing never-ending money, how they're debasing their currencies, how they think that they can just master everything to their advantage. This is not right. And I believe here in the world of this digital abundance, this cloud of derivatives, 20 quadrillion derivatives in the market, 80% of them expire every year, worthless. Grab your hand, take what's needed, bring it to your community, bring it to your family. There's nothing wrong about it, because NGOs would fail, governments would fail, but these digital clouds of abundance would stay and everyone can master it at their own advantage. With that short remark, back to the charts. Overall, speaking of China, of course, we are looking at HSI or Hang Seng Index Future, Hong Kong. And here you can see a clear breakout, very textbook pattern. I'm not really trading those, but I clearly also see here a potential for the bottom formation, or 1, 2, 3, 4, 5. Fifth Elliott wave is going to bring us at least towards 20K on Hang Seng, and with other companies way more prominent that I personally want to be in. For example, another stock that I really like here is Baidu, or Bidu the ticker, with the forward price to earning ratio of just 10. Yes, that's very low, since S&P 500 is roughly at 30 and it's expanding. China provides us a huge discount. It's similar to Baba. I think Baba right now is at around 9. And what I really love here is this channel, the ascending channel. I'm on a weekly chart, by the way, guys. So we're looking back all into 2012. So we are much lower where we were at even like 12-year ago period, when we were at $200 per stock of Baidu. And so what I'm seeing here, I'm seeing at least a breakout of this symmetrical triangle and potential retest of this mean channel, of this mean reversion channel, you know. So I would love to see the target 1 somewhere around 135, target 2 around 195, and potentially higher. And that provides us an amazing around 3-digit percentage gain, around 100% potential gain for that particular stock. Of course, if you have a little bit of a fear, like what's gonna happen overall with that particular company, I don't have time to analyze their cash flows, their business model, and this is totally fine. I mean, we're talking about multi-billion-dollar company, right? But nevertheless, there is an opportunity to enter the Chinese market via KeyWeb, which is gonna be China Internet ETF, and as you can see right now, it is also coming at a very huge discount. So KeyWeb opening pre-market 29, I think realistically at least a swipe of those highs at 35 and potentially the zones of inefficiencies at around 44. Once again, I'm looking at those charts like very briefly right now as just a technical trader, but you understand my core goal, responsibility, and priority is to find the good entry in the moment of reversion and then to catch the momentum being from the very good moment, so I don't have to worry about going against my trade, waiting for my stop loss to get triggered. I rather DCA and have my trade in profit as early as I can, and it's okay if it doesn't go this way. I exit at break even and I wait for the things to go lower. So one more thing that people who watch already the channel, they would know. For those who does not, WBD, Warner Brothers, let's project it on the screen. I think an amazing deal is price to earning ratio of 4. It gave us the hard times here. We've been kicked out of the trade. That's okay. Our invalidation was very tight. I think this is the time to try to re-enter again. You remember I already spoke about that. I think there's the debt issue that scares the market, but as we discussed right now, with the cost of capital going lower, all these debt issues would of course be repriced by Mr. Market. So this is the time to get in a little bit early. And in my opinion, I think the trade can look like that. I would say I don't want also to have any acceptance below those order blocks, and I would target those highs at least at 12.6. So we're still talking about risk reward of 10-1, but it might take a little bit of time to manifest. So if you want quicker gains, there is the sector that you all know how bullish I am. Obviously, these are the commodities. I'm talking here, first of all, about physical uranium, UUN or SRUF. Let's have a look. Here is the chart, and I would expect at least move to those recent highs of 23%, but overall we see the very, very strong uptrend, ABC correction, and in my opinion, another 5 waves of price acceleration are coming. Something like that. We will be at 30. I'm very confident about that. Another thing, Vanek Oil Services ETF gave you guys all the way from the beginning, from here in the group, with the oil giving a strong move like that and oil services lagging for sure. Nothing is for sure, but 15% move from here is, in my opinion, very highly probable. Of course, keep in mind, unless there is a huge geopolitical issue. But normally, geopolitical issues, for example, I hope nothing happens, but if something would start in the area of the Middle East, Yemen, Iran, those news are always giving a very strong spike. They're providing the tailwinds for the oil. And in my opinion, especially if you are heavy in crypto, if you are in silver, if you are in risk assets, it's important to own a piece of the oil production, because normally when oil spikes, Bitcoin goes down and vice versa. So this is a great hedge, but this is also the hedge that is right now just an amazing trade to take, right? It does not have to happen something bad in the world, but this trade is already in place. Yet if there is a if there is a geopolitical headwind, that trade is going to do even better. So consider it please as well. This is another big play of mine. And last but not least, of course, gold miners, silver miners. Guys, I went long here. I saw already an amazing opportunity. This is very conservative. Most of our junior silver miners would do much more. But from the conservative perspective, 45% in a matter of half a year, it's not bad either. And what I see right now is GDX index. Once again, I don't like this index so much because the allocation is not in my opinion, the most efficient. But you see how confidently we are closing above this line. This breakout text pattern, same, I guess, would happen soon with junior silver ETF. We are very much forward looking here to break out. You see of this daily closure yesterday, how strong it is as a vector candle. If you are sleeping on this asset class, you're definitely doing yourself a disservice. And I read every comment, and sometimes people are saying me, oh my God, who is that guy? Why he's not speaking about crypto? Guys, I'm speaking about what creates the generational wealth for you and for your families. I don't care what's the asset class. At the end of the day, what matters is your freedom and your ability to take aware decisions in the market and in the world and live the free life and do what you want. So for me, it doesn't really matter if it's going to come from a particular altcoin or from a particular silver miner. I am staying agnostic. Luckily, thanks to the universe, I have capacity to observe so many asset classes and remember all these prices and evolutions. So I'm just using my skills and sharing those with you. So let's not be dogmatic. Let's not be zealous about following one particular asset class. But of course, I also understand there are many people who, for example, have the majority of their portfolio, it's in USDC, it's in USDT. It's not easy for them to go and open a brokerage account and start trading silver miners. Or maybe they just have enough of money to be in one asset class. I understand that also some people watching that only have $1,000 or $500 to trade. That's totally fine. We all started from there. And for those people, I'd like to give an altcoin trade. And this trade gonna be Maker, one of the fundamentally strong projects, which on top of that technically has swiped all these poor lows a couple of times and now have very confidently accepted above Monday high here and continuing to accept above this order block. So in my opinion, now those highs are in danger, those highs and those highs. So my trade here is giving us roughly 3.5 risk reward, and my point of invalidation will be us falling back into this order block once again. So I don't want to see something like that where we're gonna come and spend a lot of time back into the Monday range. I want something quite confident, maybe retest of the previous week midpoint at around 2,325 and then spike up, because in my opinion, of course, there are much more comfortable shorts in that trade than longs. And when it comes to trading, I am posting the link in the comment section down below. For Bybit, they have a special partnership just with DataDash where you can open an account, deposit as little as $100 and have 500 USDT trade for free on leverage. Of course, be cautious and do not trade huge amounts in the beginning, but as I always keep saying, this is a great way to keep your journal, to keep your trading, and to build the confidence for the larger plays like bonds, like silver, like value plays. When you're confident understanding how the market functions on the smaller $100, $500 trades, it's so much more lucrative to also conduct the large allocations and not be shaking out of them. So we build our confidence on the small intraday trades and then we apply it on the larger markets. And on top of that, they are having right now the ZK Sync token distribution, which is actually a very strong project. I don't have time right now to go into details of what the ZK Sync is because I believe most of subscribers already know. So you can actually get both. You can get a free $500 trade and ZK token allocation for free. All you need to do is participate in both before actually depositing the money. So do all of those required steps like identification and go through all the steps, and as confirmed, those campaigns are combinable. With all that said, guys, I wish you all an amazing end of the week. The next week is going to be also very interesting in the markets. We're going to trade both directions. If you remember, we're also starting to short a little bit the tech here. But with all that said, what's really most important that you spend the time with the dearest one. Much love, touch the grass, and markets are here 24/7, and we're gonna trade in both directions. Much love. Stay tuned. Bye.